if you want to look at it through a really narrow lens, you can look at it as a case-by-case basis and say, well, it's not inappropriate to clamp down on private tutoring firms because this is a kind of a hallmark of inequality. It's not inappropriate to do something for gig workers working for Meituan, food delivery, because they're being deprived of social benefits. It's not inappropriate to clip the wings of Alibaba and Ant Financial because, they were basically getting away with credit intermediation, but not having to, observe capital regulations like banks do and so on. So each story has its own, or each kind of sector, each company has its own story. But actually, you do have to look at this in the big picture and in the continuum, as I've tried to describe at the beginning, about the attempt of the Communist Party to control private firms and entrepreneurs. I think Dalio is wrong. And obviously, he's got a big business in China. So, he would say that, wouldn't he? But I think the politics of this, actually, you always have to look at everything in China through how it serves the interests of the party. And I think that is the appropriate lens through which to look at this.
Another question, another angle perhaps, is what this means for overall growth levels. We know that Chinese authorities are a big fan of giving out their holistic growth numbers for the year. About 6% is where we're at right now. If they do go down this drive of common prosperity, what do you think that does to that overall number versus the distribution potentially of the wealth? And will it affect that 6% target?
Well, I don't think many people doubt the fact that, China's kind of growth trajectory, whatever the official numbers say, is downward. So China will not be growing at 6% in 5 or 10 years' time. But I think the point about the regulatory clampdown is that what we generally regard as growth stocks and growth companies, basically, I exaggerate if I say they're being treated like utilities. They're not. And they will achieve things and accomplish things. But actually, they won't and they shouldn't trade as growth stocks because they have been politicized. Capital is being politicized in China. I don't think there's any question about that. The common prosperity, which is basically about equality, would be fine. There are laudable objectives. But if the rich are being punished, so to speak, or penalized, and the funds are not going to be redistributed directly to the vast numbers of people in the kind of middle and lower income cohorts, then I don't think the economy will benefit from this kind of strategy, as it were. So, we have to see what flesh, as it were, the party puts on the bones of this common prosperity agenda.
George, this whole episode of heavy-handed moves from Beijing has made a lot of foreign investors wary of investing in China. Marshall Wace, the major hedge fund, came out just last week warning that Chinese ADRs are uninvestable at this point. Does Beijing want to stop foreign investment coming into the country's companies? No, in fact, they're actually quite keen for foreign capital to come into China. They want the dollars and they want the know-how that foreign financial firms and manufacturing firms can bring to China. So again, this is kind of a point of contradiction between politics and finance. The finance suggests that a more open marketplace and free flow of information and capital is something which China has historically benefited from and would continue to do so. But I think the politics that drives the party to initiate policies and to kind of conduct steerage, as the kind of grandfather of Chinese economy, Barry Norton, says, this is something which investors and everybody else actually is going to have to kind of deal with, actually, as to what the implications of this are. Because if Marshall Wace are right about uninvestable, and if you think that, as I do, that the valuation lurch that we've seen since February in many of the stocks in China is pretty permanent, actually. I think this is a one-off shift. I'm not saying that they can't be traded for profit, but I don't think that that the valuations in China's a lot of the tech stocks actually should be where they used to be. So that's just something people have to come to terms with and try to understand what it is that they're buying, whether they can get out of their positions quickly enough.